Traders, what's going on? Jamie Saettele here. Welcome to the Midweek Strategy webinar. And happy 2017 to everybody. I see a couple messages saying Happy New Year, Conwall, Eileen. Make sure that you guys can see and hear. And it looks like they are coming in. Everyone's saying okay. All right, great. So just trying to get a feel here for the early new year, for price action, and for good reason, right? We've seen kind of whiplash moves the last 2 days. U.S. dollar index. This is the FXCM one, new high for the trend. Yesterday pulled back sharply. Seen most obviously in dollar yen, I think in euro, and then today euro and pound are following through on the upside, as is Aussie. We've got dollar yen down a bit. Conwall asking nat gas and copper. My friend, you got it. We will get into that as always. Let me just go through a few of the majors here and a couple things that I wanted to talk about first. So what I'm going to do today is I want to concentrate a bit on what we've looked at in the swing updates just the last few days, but I also want to remind you guys of, look, new year, after the extreme moves that we've seen over a long period of time, and in dollars, nowhere is that more apparent than in just the yearly charts that were in the last post of the year, right? So just don't forget about those things. And look, it'll be crazy for me to sit here and say, well, yesterday was a major turn, right? Because we don't know that. But look, it could be. And the fact of the matter is, and the stats bear this out, when you get a new year, January is one of the most popular turn months. Okay, I did a study on this, a statistical study on this, like 10 years ago, and it holds true. And you can even see it just by looking at just this simple chart, okay, of euro over a long period of time. If you recall, the period that we've kind of been following is the inverse of 2004, 2005. And in that period, you had the high right there on the first trading day of January, back in 2005. Well, simple observation here, first trading day of 2017. Okay. Yeah, I know it's dirty. You got all the square root stuff on here. But look, the 50 line, which was support back in January of 2016, okay, was actually support December and yesterday. We got a new low yesterday in euro. But you know what happened? We did not get a new high. We did not get a new high in dollar Swiss, right? Actually just missed getting a new high in dollar Swiss. That's actually important. We've talked about this before, but you do have divergences. It's non-confirmations, if you will. When you get that with Swissy and with euro, it's a warning of a turn, and you can't have a turn unless you start going the other way, and we're going the other way today. So again, way too early to say that we've put in some sort of major turn, obviously, but this is the action that you would want to see if we were moving in that direction. A couple other big areas that are, we're coming into. Aussie dollar, actually at last year's year open, funny enough, but it's also the first square root progression of the new year open, exactly on it, 72.81. Today's high is 72.83. You've got the median line a little closer to 73. I still think that you could end up getting a move up in, if this move could fail and that you could get that final low that we've been talking about, but much above, the median line, and I would not be trying to sell this up until at least 73.90, which was the 50 line, which was resistance back on Fed Day, FOMC, 1214. Probably wouldn't really want to be a seller of Aussie anyway. If I'm going to be a seller of a commodity currency, it's probably Kiwi, right? We've talked about the Aussie Kiwi exchange rate in some recent posts, and we're finally getting some action on the upside after seeing all that divergence that we had, right? Got this potential head and shoulders. We're just brushing up on the lows in Aussie Kiwi. So if I'm going to be a seller of a commodity currency, it's probably not going to be the Australian dollar anyway, for nothing more than a very short-term trade. All right. On this Aussie Kiwi chart, look, I like the upside. I have an order in to buy it just basically under today's low. If you look at the short-term chart, you can see that we do appear to be rallying, in an impulsive sequence. So we actually could get that entry because you've got here, what you've got is a 1, 2, 1, 2, 3, 4, 5. So that would be 1, 2, 3, 5 waves in wave 3. This pullback that you're seeing now could end up being a fourth wave, or if we're headed higher, it probably is the fourth wave. And you would be looking at that point for basically a move into the former fourth wave low, which is about 104.20. It was on yesterday's spike. A lot of this is spread, but 104.20 is still a good area to want to be a buyer of Aussie Kiwi. And I really do like the potential here, not just because it's something that we've followed for a while, but you've got just great pattern potential here with this head and shoulders, not to mention the very broad, bottoming possibility. It's been going on for 3 years now, since the lows back in January of 2014. Okay. Now, I had posted a thing on Twitter. I think it might have been the last day of the year, talking about or noting the divergence. And there was a question, because I said, you see the divergence. The divergence is noted by the magenta dots here, right? And sure enough, we have turned up from it. You've seen some good turns that have failed, right? You've seen some things that have completely failed, but you've also seen some major turns. All right, and that's all we're looking for, is just a possibility here. Okay, we don't care if the whole thing ends up failing, because we'll be out way before then with a stop, right? But this could really be it. This could be the right shoulder. We could be at the end, the terminus, if you will, of this prolonged 3-year basing pattern. So this is really something to pay attention to this year. And I don't see a lot of people talking about it, in the out in FX, in the internet world, FX people, right? Some other people I've talked to at banks and whatnot, a lot of people are hyped up on it, or have at least been talking about it, even started to give up on it, which is the best possibility that this could work out. But there was some questions saying I don't really see the divergence. Well, if you look at this, yeah, it's not like pronounced, but from a rules standpoint, it's there. And all you really need are for divergence is one thing. You need a higher RSI and a lower price, right? For a low. But I filter it with having RSI above 35 for a reason, because a lot of times when you have very oversold ones, it's just a very minor low. It's not going to be a big low, because typically you don't have the final lows to move at oversold levels. Usually the good ones are above oversold levels, indicating the trend's completely exhausted itself. So point is, everything's really setting up or lining up here in Aussie Kiwi for a strong move higher, and I just want to be a part of it. So hence the order at 104.20. Okay, so that is Aussie Kiwi, and then Aussie and Kiwi. What if both Aussie and Kiwi move up together? For a bit, that's fine. With Kiwi dollar, the bigger bearish potential still there, certainly with the rounding top possibility. You've got you can call it head and shoulders, a complex head and shoulders, whatever. And really, this potential is there as long as you're under the highs from FOMC. I know that's a lot of breathing room, okay, but it's what the market. We can't force a lower level on the market, right? So at this point, you're still holding resistance here. Given the general dollar action, probably wouldn't want to be a seller of Kiwi dollar at this exact moment. A couple levels to pay attention to, however, though, 70.10, but more so 70.50. 70.50, you can see here is the 50%. It's also the high from 12.16. And eventually 70.94, which is the 618, it's also a square root progression. Okay, it's the second one up. And that could be something that's in play potentially, towards, it looks like you'd have an intersection with this trend line. I don't know if the slope's going to stay working or not. It looks like you'd have an intersection with the trend line up near some point over the next one. It looks like the 12th or the 13th. So that would be next week. So I haven't looked at the docket or the calendar to know what's up there, but I'm not sure if you get an RB&Z or anything like that. But it would be interesting if you did, considering the importance of that area around 71 or so. On the square root progressions, right? I did actually put up, if you have yet to see it, I did put up a thing on the resources. It's with the year, month, week opens and square root progressions. So you can go there, scroll down, and it's with that because really it is a add-on, or I'm viewing it as an add-on to the year opens, right? Because they're all calculated off the year open. But it just gives you an example of how to calculate them, and maybe we'll kind of give you an insight into thinking. Some examples from last year, and I picked two different examples for a reason. One is euro dollar, which was range bound all year. One is pound dollar, which was obviously trend and pretty insane, right, as far as the Brexit and everything else that we had in the flash crash. So just some examples on how they're calculated and how I like to look at them. Okay. So let's go back. Let's go into the last couple swing updates. We'll go back to the last one of the year because the dollar SEK chart I think is really important to pay attention to. So dollar SEK, we'll go here monthly and we'll go short term. All right, dollar SEK. So SEK is the Swedish krona. And for those not familiar, I have it on a different charting package. Of course I do. For those not familiar, it does tend to match the dollar index extraordinarily well. All right, so here's a monthly chart, okay, of dollar SEK. You can see we're going all the way back to really the end of Bretton Woods here. So, this is no short-term trend line. And we have a median line here, which is based simply off of, a channel from the February and February low from 1975 and then the 1992 low, okay? The median line, by no means is it precise, on many levels, okay? You did have some interesting crosses through it before you got bigger moves, notably the big rally in 1999. But we have traded into it, and we made a monthly key reversal and a monthly J spike, okay? Those are few and far between. Obviously, they don't happen too often being in monthly charts, but you can count, and this is the best, thing I can tell you as far as using Elliott wave. You don't want to be one of these people that sits there and forces a count and like counts every little miniature thing here, right? 1, 2, 3, 4, 5. I mean, this sticks out. A kindergartner could look at this and probably count that, right? That's what you want. You want it to be obvious so that you're not like forcing your opinion necessarily on the market. And this is clearly a 5-wave rally. The channeling nature of it as well is what you want to see. And if I overlay DXY with this, you'll see, okay, how you tend to get. They say that dollar SEK is the leader. Okay, certainly that's was the case with this last big run up. For example, this trend line in dollar SEK was broken well before the dollar index broke through. We are seeing dollar SEK put in a monthly key reversal, something that I would certainly and am paying attention to for broader dollar warnings, if you will. So that said, what about the shorter term picture? Well, if you go down to the shorter term charts, I think we had a 4-hour chart. This is where it gets a little tricky because this is one of those where, look, this is Brexit, okay? You have a 1, 2, 3, 4, and extended 5. I don't really like labeling extended fifth waves just because the third wave is typically the extended wave, right? I don't like labeling extended first or fifths, but this is valid, okay? It might not look like it to the naked eye, but wave 3 actually is larger than wave 1. And if you recall, the rule is that wave 3 can't be smaller or can't be the smallest wave. So you can see here, it's actually a good deal larger. Now, a lot of that, of course, is on Brexit. It's a spike. So that's why I'm, now I'm not like super confident in this. But you do have the monthly key reversal, and you do have a 5-wave drop from here. So at minimum, we should get another leg lower. All right. I will be looking for a move potentially back into, if this is ABC and we start to stay under here, then we might have already put in the top, in which case it'll be time to kind of go dollar short bias across the board. That means we'll be looking at long euros, long pounds. But even if you get another push above here, okay, above the high from yesterday, it's not necessarily, dollar SEK bullish and dollar bullish. You could still fail up near 9.3, okay, 930. So I'm using this chart more as an indicator than a trading vehicle. I've had some bad experiences over the years trading some of these less liquid, if you will, currencies like the Nordics. Just because my style, I like to hold things, for at least several days, as you know, and you can get the spreads blown way out at times, and just something that I'm not super comfortable with. So trading on an intraday basis or whatever you decide to do is great, but this is a really good chart. Dollar SEK's a really great indication of general dollar direction, and seeing signs of a big top and failure is something that I would not take lightly and ignore. Okay. All right, so we'll move on from there. What was the next big thing to pay attention to? We wanted to look at dollar rand. This is one that I just want to highlight quickly so you don't forget about it. But we are seeing a substantial test again on the long-term trend line, right? Here you go. I mean, it doesn't get much better than that, right? You've got a downward sloping channel, and we are testing a massive support line again. Remember, this is one that, if you're short here, you're going to be able to collect interest. So this could be one that would, if it goes in your favor right away, might be okay sitting with it. And two, we have all the comparisons with the previous tops. And in both cases, you did get breaks, and then you got a retest of the broken trend line. So you don't have to worry about chasing necessarily on a downside break. Just monitor it, and we'll continue to look maybe for if we do break down, you could get a move back into the trend line, which actually would get you, because considering the slope of this, you'd get a higher entry price. So don't forget about that. Okay, so going into some of the majors. Last thing, just don't forget, right? I know we looked at this last week, but it's important. So if this is a fake out, this move through DXY, this channel, slope line, just like it was back here in 99, and just like it was here in 2001, the trigger for this being a fake out and a coming, sharp drop is going to be a move back below the slope line, which is about 10150. All right. So just a heads up on that one. All right. So moving on. Dollar yen, obviously, is one that we've been following super close for a while, and was patient, waited our time, bided our time, if we will, and it's starting to work out. You do have Fed minutes later today, and look, I don't know what's going to happen. Eileen says, I wasn't sure if you'd actually taken the dollar yen. Well, yeah, we had, the entry was 118, and we got that during Asia. It traded up around 118. Well, no, I put in the entry for this, Eileen, was put in last night. Basically, look, things change on a daily basis, right? And once you got this high volume reversal yesterday, that was reason enough to put an order in. Eileen's saying, you don't manually take them, you put in orders. Well, I mean, I put in orders. I know some people will trade. You got to trade how you want to trade. Okay. I like to trade at levels, specific levels. Like one of them is high volume levels, right? So this is the yen futures chart, which flip it upside down to get dollar yen. But the equivalent level in dollar yen was 118.02. So it was right here. Okay. So once we had reversed, and there were a few things here, we actually had reversed from very near the first square root level from the year open, which was 118.33. Okay, we spiked above it, basically to the former high, a few pips shy of it. Dumped into the year open. You can see how these levels work already. And the idea then was, look, it's my experience that if you have a reversal like that, if it's going to work, then you're going to go tag that level and come off. Okay. And that's what's happened. Okay. We went to 1.8. So look, I don't know if a trade's going to work or not. I never know if a trade's going to work. The idea is to get the reward to risk, right? And in this case, we have a good one, given all the information at hand, okay, and all the charts on dollar yen that have been published, the seasonal aspects, But this was really the key, the reversal right here. Okay, and having a high volume area occur at that reversal area, suggesting or warning that you could actually have a change in behavior. So there was reason to put a trade on. And it may work or it may not work, right? The level I'm targeting, the first area I'm targeting is down here, 116.30 or so. You might be able to get lower than that, but that's it. Eileen says, wasn't sure what retests and other you were watching for to actually take the. Well, no, I mean, you can confirm stuff until the cows come home, right? At some point, you just got to put on the position. And in this case, we had enough information, in my opinion, to do it. But again, this is up to you. Look, I'm not trading for you, right? You've got to do it yourself. If you like the trade, you take it. If you don't take it. That's just kind of the name of the game. So anyway, dollar yen, we've broken down. I don't know on a long-term basis here. I mean, you've got crazy resistance up here, but that hasn't really meant a whole lot over the last month. So if we go higher, where does this go wrong? Well, if we go higher, look, here's the weekly chart, okay? Pretty clean on this stuff. Okay, you've got lows here, lows here, lows here, lows here, lows here. If you're gonna get a top, seems like a pretty good place for it, right? So, I mean, we're literally, at this point, we're sitting right here with like a 20 pip stop at this point, right? Because the stop's been lowered. So not a bad position to be in my opinion. And looking for a first target down near here range, which is very short-term range lows. But look, there's certainly the possibility of getting of this thing absolutely falling apart. And this is I think this is the slope that you could potentially follow for maybe even years, right? This is just based on the trend line back to 2000 and back to 2013 low or 12 low, is that 2012? Okay, and we're drawing it into the low from Brexit, actually. It's kind of funny when you, in the heat of the moment, like when Brexit was happening and the dollar yen flash crash and everything, I remember thinking to myself, well, that could be some sort of a low, because these are how lows happen, right? And we probably talked about it at the time, but you know what happened? Dollar yen went sideways and for months, and then all of a sudden you had a 500 pip move after the election. It's just a weird year, right? Anyway, moving on. If we are looking at this chart, and this is what I've been talking about, we'll even just get rid of this daily one. So we're going to go real big picture here. Here's the trend line. Okay, here's another trend line. So this is on linear scale, and I'm spending a lot of time on this chart because I think it's really important. But this area, if we're going to fail right here, right now, then this tells me that the linear scale is going to be the right one to follow. Okay, I'm not sure. I'm still not sure, because if it's log scale, then we can still go a little higher, right? Because log scale, you can see the median line is up and obviously increases each week. At this point, if we were to go up there next week, you wouldn't be up there until close to 120. Okay. So either way, if we start to really come off from this area, we put in a nice weekly reversal, I don't, whatever. Then at some point, one of these slope lines, one that's based on the linear scale, right, is probably going to end up being your support. And my hunch, or whatever, my gut would say that it's probably the 25 line, right? And that would be this one. Make it blue. Reason being, that you did have support on it as well as resistance on it, okay, last year. So July high, and if you were to get down there at some point, it depends when or if you get down there, obviously, but the 111 on a horizontal basis, what's really big? 111.40s, right? Here. We actually bought, we actually bought that, if you remember that. Obviously got out a little early. But maybe that comes into play. So, obviously getting way ahead of ourselves here. But the next level on this chart would be 114.40 or so. Okay, and that actually also lines up super well with some horizontal, levels. 114.50 we'll call it. Okay, you've got over here, right, all that basing that occurred last year in February before you got the next leg down. It was also resistance early in December last month. Okay, and the slope line on here, this one's not nearly as clean, but it does intersect these beautiful horizontal regions. So if let's say that we are, we end up getting, this ends up working out. You've got the 116, 116.30 is the first target, right? Which is just around just below the 20-day average and on a slope line. The next big area of interest is probably going to be 114.50. Okay, so that's where my focus is for dollar yen right now. I don't care about the upside at this point, because we had the volume reversal. We've responded to it. We're coming off. You have to like the fact that the Nikkei is up almost 300 points today, and dollar yen still coming off. Okay, we're seeing bonds actually act okay down here as well. So the long end of the curve, starts to go higher, or starts to go lower, with rates. You should start to see that pressure the buck a little bit, considering the whole story is about interest rate differentials right now, and has been with the dollar run up since Trump. So yeah, I like what it's doing. Okay, now Fed minutes again, just be aware it's coming out. I guess is it 1 o'clock? Let's see. Coming out on Thursday, Wednesday. It's Wednesday. Get with the program here, Saettele. Yeah. 2 o'clock. 2 o'clock. All right. So that'll be out later today. Okay, we'll move on from dollar yen since you're probably tired of it. Last thing I'll note, 117.70 short-term area for resistance in dollar yen if you get a tick higher. Okay. Target 1, target 2. Oh, I didn't even realize the median line that we've been following is also around 114.50. Okay, let's move on. Pound, which is looking pretty good, huh? So the median line did act. We didn't quite reach it, but 122 was the support yesterday. I'm telling you right now, and this is before the minutes come out, but I'm telling you right now that I am probably going to want to put an order to buy pound at 122.80. Okay, 122.78 is the where we opened this year, and I would expect that to act as support now. So you're looking at 2278 as support, stop under 2220. Your first area of interest on the upside is probably going to be about 2390 for cable. Okay, 2390 for cable. If you remember, this red line is a lower channel line. This was we actually shorted into that up here at 125, and it was resistance. I would expect it to offer some sort of a reaction, I guess. Again, although if you go through it, then it's probably on to the next line, which is just the resistance line, which, depending on when you get there, is probably above 125. Bigger picture cable, I'm not really sure what to think. It's one where I'd be down for a much bigger turn, if you will, higher, just because of what happened last year. You also have this. Okay, this is this is your this is linear scale, but this is based on the trend line from the 2007 and 2014 highs. Okay, median line, it's where we've been trading the last 2 weeks, last 3 weeks actually. Okay, so it wouldn't be completely out of the ordinary or completely crazy. And if you're wondering what these numbers are, this is DeMark studies, the sequential indicators. I'm not going to have time to go into them, but you can look them up if you wish. DeMark buy countdowns and sell countdowns. And on weekly charts, it's pretty rare to get buy and sell countdowns, right? So when you get them, pay attention. This one so far has actually hit the low of the week that it actually happened. The last buy signal was back in March of 2015. We went and made one more low and then went higher. Other than that, there have not been a lot of buy signals, I don't think. Here was a sell signal here would not have worked out at all. Sell signal up here would have worked out pretty well in 1995. Some sell signals, this one up here would have worked in 87. Other than that, though, yeah, you don't get a whole lot of buy signals. Okay. But when it comes to the short-term price action and putting in the trades and everything, I'm going to be looking for support probably near 2280. Okay. So that is cable. Euro. Looking at the near-term picture for Euro, we do have 2 equal legs up right here. All right, we have stopped there. I put that out on Twitter today. However, am I selling Euro here? I mean, look, if you sell Euro here, you're going against the that long-term chart with the really long-term 50 line and all the other longer-term analysis that we looked at. I think that you could probably, if this is at this point, if you extend higher, going up in 5 waves, I think you fail probably up near 106, which is, again, this red parallel. You can see all the levels you cut through there. And then eventually, I have a feeling that the blue parallel, old support and resistance at times, probably it ends up being your buy level. So in other words, dream scenario, we get a rip up in here to make 5 waves up, dip lower. So as far as trading Euro, I'm still waiting. I'd still sit here. Be willing to fade a move up into this. Okay, again, if you get 5 waves up, and then you get that pullback, but then be willing to buy that. So really, it's just kind of trade the red and blue lines, right? Very scientific, but it does work. So that's what I'm going with here with euro, is looking to fade strength, but not until you get up into near 106, right? And then ultimately, if this is a bottoming process, then you might end up having the buy of the year on this blue line right here. So that is euro. Those are the things that I really am looking at trading. I'd probably be more inclined to be bullish pound dollar than bullish euro dollar, I think. You do have, here's the thing because this is euro pound, okay? Ultimately, you do have a bullish slope here. The big support for it is a little lower. We're basing around the median line right now, but this move down is impulsive. Okay, so I'd be thinking that you get a corrective, corrective recovery, right? Look, maybe it happens closer to, maybe you get one more leg up. Maybe this is like A, B, C, and you get 87, 80s or something like that. Either way, I would feel like there's probably another leg lower in euro pound. Maybe not from here, but down towards the lower parallel, which is near 80, well, below 82 at this point, so it's 300 points lower. Probably best without a clear-cut level on euro pound right now. All right, probably best to, and it could go either way, probably best to simply trade euro dollar and pound dollar separately rather than looking for a euro pound position or just trade one or the other. All right. Okay, what about dollar CAD? I think Mike probably looked at dollar CAD this morning because he said he was going to, but dollar CAD's one I feel like you just kind of have to suck it up and say forget about crude oil. I don't know. The crude oil chart for me, it's dangerous. It's a dangerous spot. I mean, you've got, from the swing update from 2 days ago, you have the insane records in positioning, right? And that you see what happens when the market gets crowded, like yesterday happens, right? You had a giant crude move lower. Now it's retraced some of that today. But yesterday, dollar CAD didn't really seem to care about crude, and today dollar CAD cares when crude's going higher and dollar CAD's a lot lower. So look, what I would do, or what I will do, look, this is support, okay, right now. This is a 4-hour chart, isn't it? Yeah. Daily chart, if we can look at the 4-hour chart, actually, it's fine. If we're looking at a 4-hour chart here, which we are, this is FOMC. Okay, the low right now is 32.81, which is one tick away from where we closed the FOMC. If you trade back above 33.26 on a daily close, I would look towards 34.21. 34.21 in the median line. Okay, 34.21 is actually the U.S. election day close. And that would be where I would look to be a seller. And if you did that, then you might actually be able to get away with a really tight stop, like above this high, like above 34.60. Here's the U.S. election day close. So draw it in here. I'll put it in red. And it's still the high volume level day for Canadian dollars. So it's right there. And you can see moving forward, it's been pretty good, right? Resistance, support for a couple days until today. So, still feeling out the beginning of the year here, right? You don't want to go chasing every move, um, in hopes that you catch the trend. Okay, scout out your levels. If we break below here and we trade down to 32.10 or something, which would be the next level I'd be looking at, then look for, if you get rebounds, look for corrective price action and resistance, and you might at that point have resistance at former levels like 33.20, which was down here. So I don't have anything I want to do in terms of dollar CAD at the moment, but I do think that when all is said and done and we get towards into this year, I do think that the Canadian dollar and the Australian dollar are going to be good performers. And part of that, of course, is because of my opinion, if you will, of the charts with EuroCAD, right, and Euro Aussie. So we had a big breakout, as you know, in EuroCAD. Okay. Euro Aussie might be the one that's going to be better to trade for us near term with the style, at least that I'm trading, just because the levels are cleaner. I still think this was from last night. I said you could get one more move lower. We have gotten that actually. In which case, your second wave might be up towards actually where you opened up the year, right? This is now, I would say that this is probably now a full-on impulsive move lower, right? Now, I don't like counting the spike here. So if you just go 1, 2, 3, 4, 5, and we should be looking for a recovery in corrective fashion in Euro Aussie. And 45.32, if that was a low, would be your 618, pretty darn close to 45.37, where we open things up. But would be aware of 44.90 as well, being the 50%. So we'll monitor this as always. But yeah, could have a really solid opportunity to sell the next rally or whatever this bounce is in Euro Aussie for a big move lower. So that's it's one of the charts that I really like as well. Okay, so we'll get into some questions. Conwall, how you doing, man? Happy New Year. He wants some nat gas and some copper. You got it. So let's go copper. I was already looking at copper in anticipation of you, my friend, asking about it because I knew that you would come forth with copper. Copper is just freaking pitch perfect, beautiful. Look at this thing. We've been looking at this for what, how long? And the former channel, I mean, just beautiful. Former channel, resistance, proposed resistance line. This thing has been, let's go on a 240-minute chart. This thing has been support for how long? Since for 2 months. All right, this is November, December, and now. So, copper's, in my opinion, copper is going to be, I'm very bullish this year on copper and the Australian dollar. Okay. As far as resistance is concerned, within this range, you could pay attention to this line here, which is just a trend line. And that would be probably up near about 260, it depends when you get there, but 263. So my bias, Conwall, for copper is long, my friend. Now, this is a chart that we looked at last week, and I said you want to watch the intersection of this line, and that's pretty much what we got today. All right, so from here, I'm not sure how much of a pullback, if any, you're going to get. And you might be, again, just looking at 263, okay? Nat gas, which I know is one that you finished on a strong note, and we had said going into that we were at some resistance heading into the end of the year, and I'd say that resistance worked out pretty well. I have not looked at this chart yet, but holy moly, nat gas has fallen apart. Yeah, well, so yeah, nat gas has fallen apart, and let's see, get rid of this. We had a different chart that was drawn up too. I mean, we had this resistance, but it was a bit different as far as the bigger picture slope was concerned. Oh, maybe the log scale chart is what it was. Anyway, all right, so what I would do here, go to a daily. Conwall, what I would do, so, all right, this is your slope, okay? It's based on it's a trend line here, and, worked out pretty well as far as the resistance was concerned. You're actually pretty close to support, believe it or not. You have support at about 323, which is the median line, okay? That's a first level to look for support. The next level to look for support is going to be this parallel, which, as you can see, cuts through a gap. And that's going to be a little lower, and it might be actually in line with the high here from the 1126 bar, which was before a weekend gap. So if you got down towards that reason, you'd be kind of looking to cover the close or the uncovered gap. Conwell saying, is it still a buy? Well, look, as long as you're holding within this uptrend, it is still, in my opinion, a buy, right? Does that mean that I go and I just say, I'm going to be buying natural gas here, I'm going to be buying it here, I'm going to be buying it here? No, I'm not doing that. What I'm doing is if we come in here, go to a 4-hour chart, okay? 4-hour chart, 240 minutes. Let's say you make a nice 4-hour reversal bar like we did right here. Okay, and not just any 4-hour reversal bar, but a 4-hour reversal bar that touches this line. Okay, then you're looking to get long natural gas. If it cuts right through it, then you ain't buying, right? Not doing anything. The next level to pay attention to would be these parallels right here. So get down there. If it hits one of these bars and or one of these lines and makes a 4-hour bar, let's give it a shot, right? Maybe buy it. But if it keeps, if you keep going without any sort of reaction, then you're wrong. But there's nothing wrong with being wrong. You're gonna be wrong all the time. Okay, just have tactics, trade tactics, and risk management principles that keep you in the game, so that you're around to catch the good trades, like you did at the end of the year. Because I know that you were long, I think, from here to here. I mean, you picked up a big chunk on natural gas, right? So yes, I still like natural gas because you have an uptrend. All right. But there are places within that uptrend that I would be looking to buy it. But not just blindly buy it, right? You need some sort of a sign to tell you that it's okay to buy it. And depending on your style, meaning how short-term or long-term you are. Like for me, I like a lot of times to wait for a daily reversal even. Although 4-hour reversal in something as volatile as natural gas is probably what you want to do. Waiting for a daily, you might miss half the move. Are there any other questions though? Conwall, no problem, my friend. Natural gas has been a good market to chart. I know it's extremely volatile, but there's a lot of good lessons in there because of the volatility, right? We don't want to deal with dead markets, and if you're in this to learn something too, you don't want to deal with dead markets because you're not going to learn anything by charting something that doesn't move. And so natural gas has been a pretty good market to learn from as far as, showing examples. So yeah, no problem with looking at natural gas. All right, questions. Any more questions? Going once, going twice. All right, we'll revisit it one more time. So copper, my next area that I'm looking at, Conwall, for a target is going to be about 263, which is just the line that extends off these highs. Okay, that's where I'd be looking at, 263. Okay, Steve Emmerich, pound yen. Horace Sutherland, what if the dollar yen? What if FOMC minutes? What if it hits the 117.70 area? Well, that would be resistance I would be looking for. 117.70. I wouldn't, look, you want to trade at I want to trade at the inflection points, or the decision points. So that's why I traded at 118. But 117.70 I guess would be resistance. If you get up to it and fail. Look, I don't know what's going to happen with FOMC minutes. They could come out and everyone could take it as they're going to raise rates like 5 times. I don't know, right? If you ask me, everyone seems a little got their heads in their ass when it comes to the U.S. Yield situation. But whatever, that's an opinion. It doesn't really matter. Has no place as far as the trading's concerned, right? But yeah, I wouldn't say to just sell in the afternoon at 117.71. It's the afternoon and there's no other market open except for New York. I typically like my trades, to be planned a day and ahead and to execute typically during more active hours, not necessarily after, Europe's closed and the US is the only market open. So I personally wouldn't be trading into 1770, but that is an area that I watch that I would suggest you watch. Okay, I will be watching it. Pound yen, go to that, sure thing. So pound yen, if you recall, we nailed the resistance on this back in December 15th. And we're still under it. I think that you could probably get a move higher from here. You could dip into 142.90, 143.20 again, but then you could move back up into this level, which is 146.77. That's the daily reversal level. Again, that's the high day close. It's above all the fibs, although it might be a 786 there, right? Pretty close. So you can see that the levels we've had highlighted have worked out pretty well. We had this stuff highlighted back here, got a pretty good bounce off of it. And we had this level highlighted as resistance because of the slope, and it's come off there. But from here, if I go to a 60-minute, right? Look, you've got a clean impulse higher, okay? This is probably an A, a B. Look for a C lower, C wave lower. And I'd be then looking to head higher. So given the impulsive nature of the rally from 1229, this move up, to me, your bet here should be on the long side as long as you are above 142.15, right? Now, areas to provide support, okay, could be still under the lows from the first day of the year. So basically, you might be stuck in a sideways moving pound yen for a few days before you eventually get a move up on that parallel, um, in 146.77 region. And you can see it. Let's look at it. Even we'll see it clearer on the daily chart. Okay, so here was the slope, right? Brexit, December, one leg down, right? Little A, little B, little C. So this is your resistance up here at 146.77. And if you're going there, then yeah, you probably want to look to position on the long side, but you don't want to buy it here, right? I wouldn't, because you've got a pretty big stop to deal with, and really not worth the risk if that's what you're looking for. But your resistance, or former resistance up here, and these range areas down here, I still think would be areas to watch for support. Okay, so in summary, 42.90, 43.20, ideal support in my opinion for pound yen, to take it up to 46.70s or so, at which point I would probably actually want to be looking to short it. All right. Okay, so markets are kind of starting off with something of a two-way volatility this year. Fine by me, as long as we have volatility. And we'll see how this dollar responds to these minutes and everything. NFP, of course, is on Friday, and look forward to the January NFP figures, of course. But at the end of the day, I think we know what we're looking for, what we're looking at, right? We're looking at a very mature dollar trend. It seems to be crowded. I mean, I see paper after paper, it seems like, or news article after news article, talking about the dollar. We looked at one a couple weeks ago, but here's another one. Or we looked at three a couple weeks ago. May have been actually the last webinar. No, I think it was two, the second to last webinar of the year. But here's another one. This is one from January 1st. Re-energized dollar looms over the rest of the world. All right. So we are, seeing just everything that you would possibly want to see or could see before you get a major turning point. And obviously, in hindsight, it'll look easy because you'll say, oh, well, there was a magazine cover and all these headlines and everyone was bullish the dollar and every bank was bullish the dollar, blah, 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 and then the dollar crashed. Well, in real time and actually doing it in real time, it's not so easy, is it? It's pretty tough. But all we can do is pick our spots from a trading perspective. And that's what I'm trying to do. So with that, we'll finish up this first webinar of the year, and good luck. And have a great rest of your week, everybody. All right, take care. Bye.